Hi guys, welcome along. Lucas Rogers from the Rogers Property Group. Tuesday they met, the RBA's meeting once a month, and yes, for the first time in 11 years, they've raised interest rates. It's very interesting. A lot of people have been saying it's the first interest rate increase that people will have seen in their lifetime. And I suppose if you are in your early 30s and have just started borrowing, I suppose that is the case. But yes, the RBA did increase interest rates to a basis points, or up by basis points of 25 basis points, I should say. So that increases the base rate to 0.35%. So really not that high. A lot earlier than they'd anticipated. The governor of the RBA said they wouldn't increase interest rates until 2024. But based on various indicators such as inflation, that's now running at 5%, which is very high. The RBA's guidelines are between 2 and 3%. Interesting enough, prior to the viruses raising its ugly head a couple of years ago, inflation was running at about 1 to 1.5%. So the big push was to try and actually raise inflation at that stage. So interest rates have increased. Inflation has also increased as well. What's also another factor that's pushed interest rates up has been the reduction in unemployment. Unemployment, if it goes down any further, it's going to be the lowest it's been in 50 years. So there is a real labour shortage on at the moment, and what that's doing is that's pushing wages upwards. And I'm sure that any of you who are trying to get your gardens done, or trying to get some landscaping arranged, or building, or whatever it is, you'll know that it's very, very difficult to get people at the moment. It's very hard to find labour. And so then supply and demand, what's going to happen is labour costs are going to go up. Materials have also gone up as well. So inflation is rising and pushing your wages and also obviously your interest rates up. So what does that mean for us investors, home buyers and so forth? Well, to be honest, really not a lot. 25 basis points is not a lot. It's going to add on around about $40 per month to your average home mortgage. So it's really not a lot. $10 a week won't have an impact on too many people. I think it's well timed that the RBA did actually increase interest rates, and my personal opinion is I'm glad that they did. We don't want inflation going any further. We need to try and put a cap on things. Queensland, as far as the property market is concerned at the moment, is just absolutely going gangbusters. You can't get land. It's difficult to get supplies at the moment. The market is going up unbelievably. If you own property, well, that's fantastic news for you, and you're making a lot of money. But if you're one of the people that are trying to get into the market, it can be very, very difficult to do that at the moment because prices are rising just so fast. So I think a little bit of water on the fire will go a long way to help a lot of people. And look, if you're the sort of person that $10 a week is going to make a huge amount of difference, then maybe it's not the right time for you to be investing anyway. But look, overall, it's not going to have a huge impact on anything at all. I think the markets are still very steady. What is increasing very rapidly is the cost of rents. People are coming in at the moment on properties that we've advertised for rent. It might be at $550 per week, and people are coming in and offering $600 a week just so they can secure the residents to be able to rent. It's quite amazing. So rents are going up much faster than the interest rates or anything like that. So for those of us who own property at the moment, or are looking to get into an investment, I don't really think that the interest rate increases of 0.25% are really going to have any impact on us at all. As I said, the rental yield on the investment is going up very fast as well. People are paying over the odds for rental properties at the moment. So I really think that it's not really going to impact on buyers at all at the moment. I think it's just a case of running your cash flows, making sure you can afford it with a little bit of an interest rate buffer. When I'm doing my personal cash flows at the moment, I'm running all of my cash flow forecasting with a 4% interest rate. I don't think they're going to get anywhere near that anytime soon, but it's always good to have a buffer there. But it's still a great time to invest. There's a lot of room left in the markets at the moment. I'd be very, very cautious about Sydney and Melbourne as places to be investing at the moment. They've had a huge increase over the last few years. The fundamentals in those markets are not very good. There's been no population increase. And also, there's other factors that with those markets, they're just overpriced. The debt to servicing ratios are not good at the moment. So I would steer clear of Sydney and Melbourne. Places like Brisbane, Perth, Adelaide to a lesser extent, they're the markets that you want to be focusing on at the moment. And I still think that there's a lot of growth, a lot of money to be made in those markets. Look, if you'd like to talk to me at all, then please give the office a call, send me an email. Love to have a chat with you. If you've got any concerns about interest rates or wondering how that's going to affect you, then don't hesitate to give the office a call. Good luck with your investing, and look forward to chatting with you soon. Bye then.